Welcome back to another insightful episode of Zaki Crypto Update. If you're passionate about staying on top of the latest trends and developments in the cryptocurrency space, you've tuned in to the right place. Today, we're diving deep into one of the most intriguing stories in the crypto world right now, Cardano. Cardano price crash could sweep $0.25 after 48% drop in new addresses. But before we jump into the details, do me a favor, smash that like button, hit subscribe, and ring the notification bell so you never miss out on our latest updates. Let's get into it. The cryptocurrency market has recently been engulfed in a storm of volatility, with many digital assets experiencing significant downturns. The broader market has been impacted as Bitcoin, the flagship cryptocurrency, extended its correction from highs near $70,000, now teetering closer to $60,000. This sharp decline in Bitcoin has sent shockwaves through the market, dragging down major altcoins like Ethereum, Solana, XRP, and Toncoin. Amid this broader market turmoil, Cardano ADA finds itself in a particularly precarious position. The digital asset, which once promised to revolutionize the blockchain space, is now facing a confluence of challenges that threaten to push its price down even further. At the heart of Cardano's troubles is its price action, which has been confined within the limits of a falling wedge, a technical pattern, often seen as a precursor to a potential breakout. However, despite the optimistic outlook that this pattern might suggest, Cardano's situation is far from straightforward. The cryptocurrency is battling not just the technical forces that typically influence market movements, but also a series of fundamental issues that could severely hamper its ability to recover. One of the most concerning of these is a marked decline in network activity, which, if left unchecked, could act as a significant drag on ADA's price, possibly driving it down to as low as $0.25. One of the most alarming developments for Cardano is the dramatic drop in the number of new addresses joining the network over the past couple of months. Blockchain data from Interblock reveals a stark 48% decline in unique addresses, falling from approximately 14,700 at the beginning of June to just around 7,650 by early August. This sharp decrease in network activity is not just a statistic, it's a potential harbinger of further price declines, as a reduction in new addresses typically signifies waning interest and demand for the asset, which could deprive Cardano of the momentum it needs to sustain any meaningful recovery. But it's not just new addresses that are in decline. The total number of Cardano addresses has also seen a decrease, though this trend is less pronounced. From a peak of 4.46 million addresses in February, the total has dipped slightly to 4.45 million. While this may seem like a minor change, it underscores a broader trend of weakening network engagement. For a blockchain network like Cardano, which thrives on community participation and activity, this decline is troubling. It suggests that fewer people are engaging with the network, either by creating new addresses or by actively using existing ones. This decline in network activity is particularly concerning given Cardano's ambitious goals. The Cardano network was designed to be a robust, scalable platform capable of supporting a wide range of decentralized applications, dApps, and smart contracts. However, the drop in active participation raises questions about the network's ability to fulfill these promises. If network activity continues to dwindle, it could lead to a vicious cycle where reduced usage leads to lower prices, which in turn further discourages participation. From a technical perspective, the outlook for Cardano remains challenging. The daily time frame shows a clear weakness in ADA's price structure, with several indicators pointing to the possibility of further declines. One of the most widely watched indicators is the moving average convergence divergence MACD, which is currently flashing strong sell signals. The MACD line has crossed below the signal line, a classic bearish signal that indicates downward momentum is building. In addition to the MACD, the recently confirmed death cross pattern adds to the bearish sentiment. A death cross occurs when a short-term moving average crosses below a long-term moving average, signaling a potential shift from a bullish to a bearish trend. In Cardano's case, the 20-day exponential moving average EMA has crossed below the 50-day EMA, a move that historically indicates a higher likelihood of a sustained bearish trend. Moreover, Cardano's price is currently trapped below all three major moving averages, the 20-day, 50-day, and 200-day EMAs. The 200-day EMA, which is often viewed as a key long-term indicator of an asset's trend, is currently acting as a strong resistance level at $0.4572. This is a crucial level for Cardano, as a failure to break above it could reinforce the bearish outlook and lead to further declines. The $0.35 support level has emerged as a critical line in the sand for Cardano. This level has been tested multiple times, and each time, bulls have managed to defend it. However, with the current market conditions and the bearish signals from technical indicators, there is a growing concern that this support level may not hold for much longer. If the $0.35 level is breached, it could open the floodgates for a rapid decline towards $0.30, and from there, the probability of a crash to $0.25 increases significantly. A breach of the $0.35 level would not just be a technical breakdown, it would also represent a psychological blow to investors who have been holding out hope for a recovery. A move below this level could trigger a wave of panic selling, further exacerbating the decline. For Cardano to avoid this scenario, bulls must not only defend the $0.35 support level, but also mount a strong enough defense to push the price back above the key resistance levels. Despite the overwhelmingly bearish outlook, there is still a possibility for a bullish reversal. The falling wedge pattern that has formed on the daily chart is often seen as a bullish reversal pattern. This pattern is characterized by a narrowing range of price action, with lower highs and lower lows forming within a converging channel. The pattern is considered complete when the price breaks above the upper trend line, signaling the start of a new bullish trend. If Cardano can manage to break out of this falling wedge pattern, it could trigger a significant rally. The measured move technique, which involves measuring the distance between the first swing low and the first swing high within the wedge, suggests that a breakout could see a rally as high as $0.75. This would represent a 61% increase from current levels and would go a long way toward restoring investor confidence in the asset. However, for this bullish scenario to play out, several conditions must be met. First, Cardano must maintain its current support levels, particularly the $0.35 level. A breakdown below this level would likely invalidate the falling wedge pattern, making a bullish reversal far less likely. Second, network activity must pick up. Without an increase in the number of new addresses and overall engagement on the network, any rally is likely to be short-lived. Finally, broader market conditions must stabilize. As long as Bitcoin and other major cryptocurrencies remain under pressure, Cardano is unlikely to stage a sustained recovery. The challenges facing Cardano are not occurring in a vacuum. The broader cryptocurrency market has been under significant pressure, with Bitcoin's correction setting the tone for the entire market. In addition to technical factors, external events such as geopolitical tensions and economic uncertainty have also weighed heavily on the market. The ongoing war in Ukraine, rising tensions between major world powers, and fears of a global recession have all contributed to the negative sentiment. In the United States, the Federal Reserve's monetary policy has been a key driver of market dynamics. The anticipation of multiple interest rate cuts in 2024 initially provided some hope for risk assets like cryptocurrencies. However, as fears of a recession have grown, the likelihood of these rate cuts has diminished, leading to further uncertainty in the market. For Cardano, this means that even if it can overcome its technical and fundamental challenges, it still faces significant headwinds from the broader market environment. As Cardano navigates this challenging period, the road ahead is fraught with uncertainty. On one hand, the falling wedge pattern offers a potential pathway to recovery, but this is contingent on several factors falling into place. On the other hand, the declining network activity and bearish technical signals suggest that the bears remain firmly in control. For investors and traders, this is a time for caution. The next few weeks will be critical in determining whether Cardano can mount a recovery or if further declines are in store. In conclusion, Cardano is at a critical juncture. The price action within the falling wedge pattern suggests the potential for a breakout, but the bearish signals from network activity and technical indicators cannot be ignored. Bulls must remain vigilant and be prepared to defend key support levels, particularly $0.35, to prevent a further decline. At the same time, it is essential to monitor broader market conditions and external factors, as these will play a significant role in determining Cardano's future price trajectory. Whether you are a long-term investor or a short-term trader, it is crucial to stay informed and be prepared for multiple scenarios. The next few weeks will likely be pivotal for Cardano, and understanding the dynamics at play will be key to making informed decisions. As always, risk management is paramount in navigating the volatility of the cryptocurrency markets. If you enjoyed this deep dive into Cardano's price action, don't forget to like this video, leave a comment with your thoughts, and subscribe to Zachy Crypto Update for more in-depth crypto analysis. As always, stay tuned, stay informed, and stay ahead of the curve in this fast-paced world of cryptocurrency.